What's up, guys? How are we all doing? You called it baloney. No, it's not made off with me yet, Dave. Look at all these pits down below us. Down at 6,300. Those are some nice pits. It's a little spot. Mm-hmm. Does ES have support? 6361, which is roughly 6320. Yeah, it's not too bad. Interesting.
Is the pear he ate from.
Well, we did up, and then we went back down again. We failed the up. Fuck. Hmm. Um, yeah, that's nice. Give me 1 second, guys. All right. Oh, there we go. Okay. That worked. Sorry, I had to close some butterflies. Would you love? I would love you to take on the fast tracking of SpaceX into QQQ. And if I'm so upset, should I just sell, or is the holdings really going to amount to 1% of QQQ assets under management? Wait, what? Do you have like stock in SpaceX or something? Is my chart way behind? Oh, maybe because I had another window open. That might have been my bad. For 50% of my port in QQQ. Out. I mean, I hope SpaceX is the worst IPO anybody's ever seen. No offense to you, but yeah, you'd have a decent chunk of exposure to it if it ever achieves the projected valuations. I don't think it will, but that could also be kind of bad. Or it will briefly and then fail horribly. Yeah, I mean we can technically fall to 6,300. There's some support here at 25 and it's getting kind of late, so I don't know. It depends on if bulls can sell the uptick in vol heavily enough to get a reversal. They failed at the vol trigger, pretty remarkably. That was 63.56, I believe. Um, yeah, I mean we could continue down potentially. Chances that we close over 63.20 today. I'll tell you what we're not likely to close at, CMO, and that's 63.20. It's far more likely for us to close to the downside or upside of it. So somewhere between here and 63.50 or between here and 6,300. That was a vol trigger. The prior low. It's just where vol's gonna like price up, basically. Someone didn't read fucking Pickles Picks after I specifically told them to fucking read Pickles Picks. Don't act like you didn't see my fucking message. Yeah, Gamma's extremely negative. Iran's trash talk is freaking bonkers. I know. I don't know if I would pick up Upstart. We're in like the middle of like a potential credit crisis, and you want to pick up somebody who loans money with an AI algorithm. How do I join Pickles Picks? Oh, it's just on the Discord. You become a YouTube member, billionaire or higher, and then you can link your YouTube to the Discord. I'm here. I liked the stream, my man. That's what I like to hear. It's not a new term for an old concept. It's basically just the price where volatility is gonna. You can call it a trigger or a pivot or whatever you want. And it's basically just. It's basically just the price point or the technical level at which volatility is likely to start pricing up. So if you look at like, I don't know if this is lined up properly for me to draw it for you, but maybe it is. Okay, hold on. Fucking Epic Pen is such a piece of shit. Why do I have to do this every goddamn day? It was already set to fucking display one. Okay. I don't know if that's actually lined up properly. It doesn't look like it is. Hold on. Maybe that works. Yeah, that works. Okay. That's lined up. Hold on one second. So, all right. So here. Bitch. All right. So I said 63, 56 here, right? Which is roughly around that level. And this was what I said was going to be the vol trigger last night to the downside. Basically, the price where short term or like SK10 steepens, basically puts get bid back up, and IV10 pricing from the prior night becomes justified. And then continues up. And so basically we slipped it, right? And the first thing that happens when you slip it is puts price up. And not just puts at the money, right? The puts all the way down price up, all of these puts. And so usually this price point is met with a bounce. And if you look back here, you can kind of see the put selling come in. You see the spike in PCR, and then put premiums come down. So both sold that pricing up. But once we moved up, they started to make some money as put premiums slid, and call premiums started to rise, at which point call premiums get sold, and that crushed the bounce. So they're taking profit, and then that starts bleeding out. And once that starts bleeding out, everybody who sold here is now fucked here. And this is the collapse of that positioning. If you were a pigeon whale, you would have. I opened a 63.25, 6300, or 62.75, 6300, 63.25 call butterfly. Right here. For $85 debit. I closed it here for like 500 or 515. This is like 600% return. I think so. If there's a pigeon whale that can confirm the time, I posted it, but it's there. It is kind of hot. Yeah, there is a chance we see 6,300. That's why I opened the 6,300 call fly. I just wasn't going to hold it through another support level this close to end of day. And bulls are selling puts at 25, so they're going to try to stabilize here again. They can fail again, obviously. Vol will go up and will come down. Skews shifting more to the downside. People are probably buying the out of the money put. When you do those, I'm usually levering them up. I'm usually opening like five to 10. I mean, they're a multi-leg position, but I'm opening like 5 to 10 of them. I generally don't size up like multi-leg strategies too much. Sometimes I do, but it can be hard to get like enough fills, unless especially if you're working the like. I have to jump for a work call, but I have multiple positions open. 620p, 610p expiring April 2nd. 610p's are negative. 620p's are 70% profit. What should I do on SPY? I mean, you should definitely set some stops. This environment is it's like very prone to mean reversion because volatility is so high. So you can get a big move down, right? But you may not. And so if you've got some profitability, the first rule about being a bear is protect it because other bears will take profits and you'll end up holding their bags. So if you can scale out of some of that, at least get your cost basis back, that kind of thing, manage the position a little bit, then then you're gonna be in a better place if you get caught off guard. No problem, man. Give me a second. I'll be right. I'm gonna just grab. I'm gonna grab my food real quick. 2 minutes. I'm back. So yeah, we could slip here. It's possible. We're just very unlikely to close at, well, now at 63.15. So this structure, when you have very deep negative gamma, this structure lends to closing not at spot. You know, we've talked a lot about how, like, you know, spot can get pinched between positive and negative gamma, where you have like positive gamma here. Oh, I'm not going to draw that with squares. It'll look like a swastika. So when you have this set up, spot is here. I guess I could draw with little bars. It'll make it easier for you guys. Or you get like this. You get like low gamma at spot, right? And then you get like big negative gamma below spot. This has a pinning effect. Even more so in positive gamma environments. And this means that spot is very likely to close between these 2 points, right? But when you have negative gamma, or deeply negative gamma, like that, or, you know, structure like this also works on the positive side too, although the end of day moves are less extreme. The least likely place for you to close is here. So it's more likely that you close to the outside of that range, which makes these breakpoints usually where gamma turns positive, or gamma turns more, like gamma goes flat down here, are very important. So like right here, like you'll get positive gamma or you get flat gamma down here. Like those outer bounds. So say this is, you know, strike XO. So like, let's just, you know, just assign a number to it. Let's say 70. This is 75, 80. Then the breakout point is at 82. A very likely closing price. Or, you know, down here you have, you know, 65, 60, so 58. So these become the more likely closing prices. And then if these are slipped, price can rocket and squeeze outside of that range. So it's a little bit more complex. Yes. Now, breaking out above 32 right here, very unlikely. It's likely to reject and probably find something in between there. But if it does break out above 32, we can mean revert all the way back to 50. And that says something else too that's fun. Oh no, I just stuck my finger in mustard. Ew. Yeah. That's not bad. If we did pull back up to 56 by close, where the vol trigger was, it would tell you that intraday, this repricing of puts, and then back here, it would be invalidated. It's not the war that's the issue, or driving prices, or volatility. What's actually happening is that volatility is becoming more spread out. So it's not that people aren't pricing in a ton of near-term risk, but they're pricing in higher risk for longer. And given how expensive options are, we're basically flat right now, day over day. And what metals? The gold and silver? What does it say when GF stays over GF? GF stays over DF? Is that what you mean? Like how these have crossed over? That's usually pretty bearish. It's the easiest way to think about it. In practice, it's more complicated. It's kind of like we are falling. We are falling with the sell-off. It's like mechanical selling of Delta, basically. No, that's not correct. Well, I mean, okay. It's a take, but I do not believe it's a correct one. Twilderness. Precious metals, from my point of view, and based on the data, are bid up entirely on dollar risk. So they bid up sharply when it appeared the dollar was going to decline, and then subsequently fell off sharply as the dollar rose. And the dollar's rising because oil's transacted in dollars, and oil is up, which is pushing yields up and pushing dollars up, which means that central banks holding gold as a dollar hedge do not need to hold as much gold as a dollar hedge. If dollar starts coming back down, central banks will start picking up precious metals more heavily again. Mago Man, if you go back like 10 minutes, I explain all about close. But based on the fact that we moved up, probably somewhere around here. Why are you wearing clothes? I don't know. I heard a female. This is the internet. I don't know what you're talking about. I don't have a husband, AJ. Nice try. Also, lady, female, some incel nonsense. I don't really know if incels started the word female, but I mean it is Danimal. What do you expect? Those 6,400 calls haven't printed today because of the matriarchy. Meanwhile, some Chad Mog Bear is running off with a girl he likes. It's not easy living in Indiana. Fucking brutal, man. He knew it was going to happen when he tried to start a fucking start a movement in my Discord. Bearish, bullish, doesn't matter. All the attention is mine. The fuck is a Giga Lad? VIX snaps back and forth during crashes. Oh, come on. Rims has been through enough over the years. Because of you, I made him Land Rover money on EPAM. He just lost it all. Holy shit. Velveeta crankshaft, you're back? Nice. Speaking of EPAM, it looks cheap. Leaps. It is cheap. But it's also the equity market's literal only way of pricing in the conflict in Ukraine. So unless there's some like peace talks or Putin surrendering or some shit, I wouldn't get too bullish on it. Despite them beating all of their earnings forever. Well, we broke 32. So 50? I would assume. I don't know how much delta there is at 40. Not a lot. This is kind of like what I was explaining the other day with So say you butterfly the close to the upside of spot. Like that. You can lever up the out of the money. So, you know, we had the structure like that, and you think you're going to close at one of these two spots, but you know if it breaks above or below those, it's going to squeeze. So what you can do is you can like lever up the out of the money strike. So say you open your double butterfly like this. Is that right? That's right. So you open it like that, but you can add one of each outer leg. And you can create a structure like that. And that structure perfectly captures all potential price action. with a max loss of $200. See? One of these days I'll make you guys get at this shit. I swear to God. Dirk's Vibe Fly was at 204. We were still at like 69, 59. I knew it was going to happen. I just wanted to let you know you're the guest. That play was great. Fuck the Boars. That's actually amazing. I'm not trading any more directionals. That's illegal. No, it's not. This is the pigeon whale. Inverse pigeon whale? Iron pigeon whale? I don't know. Whatever the fuck you want to call it. Man, no matter how I type this, YouTube is blocking my message. Just DM me on the Discord or something. It's probably like one word that isn't actually a curse word that's getting hung up. I actually think there's a way for me to stop that, but I'm not entirely sure how to fix it. Oh, there's a Ko-Fi? Hold on, let me go back to the chart. I tried the inverse pigeon whale with my ex and it nearly snapped off. Never again. You gotta do stretches. No, he should Ko-Fi it. Oh, I don't care about that. Hey, look, 50. Who would have thunk? How do you do the shock Pikachu face? You like stick your tongue out and cross your eyes or something? Nice try, Nunzo Guns. You fell for the bait. I sold my 25 calls too soon. Yes, you did. That's how you screenshot your brain. Yes. There, I managed to get by the block. Wouldn't you agree that we're likely to rise as vol comes back down and that stuff is likely to blow over? By blow over, I mean for CE or diplomacy. Why the fuck would diplomacy be a blocked word? What is wrong with YouTube? Did YouTube get bought out by the Department of War? I would agree that we are likely to see. Okay, so this is tricky. As long as oil remains high, volatility in equities will remain high. However, if we stabilize at higher oil with higher dollar value, I think gold and silver are probably going to sell off near their local lows and hold. Because I think long-term risk to the dollar is going to keep central banks from shedding any significant amounts of gold or silver reserves. A lot of last week's sell-off was like Turkey just dumping shitloads of gold reserves. But I will say, as dollar rises, gold will shed. So we really want to see dollar get pinned for gold to move up, for metals to move up, or dollar to fall for metals to move up. Now, there is a catalyst for that with the USD JPY hitting like 160, where intervention becomes extremely likely from the Ministry of Finance in Japan, and also probably through the Fed as well. At least that's what was discussed with the New York Fed near the start of the year. And so if there were intervention, given the leverage on like between the Japanese 10-year and US 10-year is so unbelievably high, like 11x, I would say that an intervention right now would likely trigger a squeeze, and that would force short covering on the yen, which would drive the dollar down rapidly. However, if oil were to move up higher, like above $120 a barrel, Japan either needs to start transacting in the yuan for oil, which is very bearish for the dollar, or Japan needs to peg the yen to the dollar, which is very bearish for the dollar. And I think both of those could drive gold just to new highs, easily to new highs. ISM services and manufacturing PMI thoughts. I mean, those are probably our best price indicators for inflation right now. We don't. Do we get those tomorrow? I thought those were like end of week. Wednesday. Wednesday we get manufacturing. I don't even know when the fuck we get services. Next week. Those are significant, especially if prices continue to rise. Prices have been trending up hard, so. Did I close that butterfly at the exact fucking bottom? Damn. I'm gonna go play with my new tractor. Nice, man. Ding ding. All right, so yeah, let's cover end of day and see what we got fucking going on here. It's gonna be limited because I'm on my laptop, but I'll try to cover at least the important shit. We didn't close above 50, which is of some significance. Give me a second. Okay. All right, so we did close lower, not near the bottom of the implied move, so still grinding down. This looks like a charm push into tomorrow's expiry at this point. Like, there's just so much fucking negative delta. As that decays, it's just grinding us down. But I don't think people are adding to puts, which opens up a lot of actually bullish potential as the collar falls off. So be warned of that. And the collar is moving off of the SPX chain, as far as I know, over into like an ES contract. They may have just done that last quarter. I'm still not entirely sure that's going to be true, but it does appear that way. The last collar to rolled over to ES options on futures versus SPX, and it seems that they had a better shot at liquidity there. And that, especially with the downside move and vol being so high, that may be the case again for the quarterly roll. However, going into tomorrow, we have a market or an index that's down, about 7%. And there's going to be a lot of 60-40 funds and like pensions and shit like that are net buyers here. Like probably several tens of billions of dollars worth of buying flows into the quarterly rebalancing for window dressing and shit like that. So I would expect end of quarter losses to not look so fucking bad at the end of day tomorrow. Now, obviously, headline news and stuff like that could collapse that positioning. It could drive things down. But generally speaking, the end of quarter window dressing has some bullish momentum that it can drive following such a rough quarter. So keep that in mind. It's definitely at least good to have some upside hedges tomorrow if you want to maintain downside convexity. But we retested 63.61, which is the pre-market low over here on ES. We caught a bounce off that, but a very weak one, even with the higher volume. And that looks to be failing after market close. So we squeezed out some of that upside sold call positioning, but ultimately failed the 50 test into end of day over on SPX. This could continue to bleed off and is very likely to set a new low. I know it technically did here on ES, but this is a good setup for downside continuation. I would be worried if tomorrow opened substantially lower. Like if we get like a 1% move down overnight, I would be looking for the market to bounce hard. Going into like the first 30 minutes of tomorrow, and we do have more data throughout the week that will push back on some of that bullishness, but I'm not sure this is the last attempt at mean reversion that we're going to see. Yields at the top end of the curve, falling a bit, and this is still showing some signs of bullishness. VIX and VIX 3-month down on the day, despite it being red, and dollar pushing up a little bit higher. So I think those are fairly in line with another attempt at mean reversion. I don't think puts priced up substantially today. They did price up a little, but mostly on the 0 day. Correlation starting to stabilize after 2 tests up at like 42. This may chop for a little bit before we see, another leg up in the breakdown of dispersion. But 3-month correlation is not looking so bearish. So I think people are kind of moving from this front end volatility to long-term volatility. But that does mean that we're likely to get more bear rallies. As soon as that like front end fear shakes off, you start to get more rapid like profit taking and mean reversion on the short dated options. Even though that trend may be down over time, it's likely that it becomes a lot choppier with 1 month correlation kind of normalizing a bit. Leverage on the carry fell back from almost tapping 11 to 10.7x, and also fell off a little bit at the front end. Forward yield on volatility remains at about 8.2%, but we see a big move up in the 10-2, moving from negative 8.5 back up to about negative 5%. While this isn't great for silver or gold right now, it may be another indication that we're starting to see more people willing to sell vol at these levels. We got a rise in correlation between VX and cash VIX again today. After falling on Friday, it bumped back up. So there are some put buyers, and I guess maybe this is the most important thing. We're going into end of month, and SOFR relative to the IORB rate is very stable. So I think this is telling us, especially at end of quarter, that what the Fed has done with their $40 billion rollover is definitely helping loosen up some of those short-term financing constraints. And as that gets a little bit looser, we're also likely to see more leverage pile back in. As far as today goes, down volume pretty elevated from yesterday, but not very high overall. So not like a big sell-off. And then lots of sectors green today. Tech didn't perform well, but tech services did all right. Health technology, finance, retail trade, consumer non-durables. Some of these rotational, admittedly, but producer manufacturing got hit really hard, um, and electronic technology. So, it's not a broad rally, but it's a significant chunk of the S&P is outperforming, and so we're starting to see that turn around from everything just selling off, and that's usually another sign that you're going to see some kind of bounce or mean reversion. We did slip the 6360 level and closed below it today, which we did not on Friday. So the bearish bias remains. I do think that this range in here, between like 61.77 and 62.87, is somewhat significant as far as support levels go. And I could easily see that being a point where we turn around to retest like at least the 200 MA. Now, if we fail further from that point, that would open up even more downside. But I do think that so much accumulation happened in this range from last like June through August that it's highly likely that we are going to find some long-term buyers here. I think that's about all I got. Oil's still going up though, so. On the technical side, oil looks well on track to get back to, crude light looks well on track to get back to 120 a barrel. Brent, back to its prior high. Slow grind up, but it seems that the initial pricing was justified, so we're repricing towards that level. Could it go higher? Yeah. I'll be honest, if fucking Trump blows up a nuclear reactor or destroys enough desalination plants that, Iran can no longer effectively output oil, they're assuming that their response in kind towards infrastructure and desalination in the region is of a similar scale, then I could see oil not only pushing up above 120 a barrel, but staying there for a very long time. Well, no, demand destruction for the S&P comes later. That comes when this higher for longer oil starts to price out across the economy. So we're not going to see those impacts right away. We're definitely not going to see them on this quarter's earnings, but there's no demand drive to this inflation. So this shock is going to have to be absorbed by corporations on their margins. And as that shock is absorbed on their margin sheets, it's going to lower, PE ratios. Because there is no company in the world not affected by oil being $100 or over $100 a barrel. I don't think we're that far off. The 10-year almost tapped 4.5%, which is I think if the 10-year taps 4.5%, we're going to need to see some sort of policy action in order to stabilize things. And if we don't get a policy action fast enough, it could start causing some banks to implode. Above 5%, they all start blowing up. But 4.5 to 5, smaller banks. What policy action can help? The Fed can buy more of the short end. We could get a little bit of QE. I don't think it's beneficial. I don't think we can do a whole lot of it. It probably won't have long-term positive effects, but in the short term, it can drive things up. Also, Nvidia set a real high bar for themselves for next year that's going to be fucking hard to meet because I don't know where the fuck people are going to get $1 trillion to pay them $1 trillion in revenue, especially when oil's 100% more money. That remember that like that oil price filters out to everything. There's nothing that is not touched by it. It is consumer electronics, consumer non-durables, the shipping and storage of every item in the world is reliant on oil prices. All of the logistics that occur to put a product in your hand are dependent on oil prices, and those prices are now double. I have no idea if the trillion was cumulative from 2025 to 2027. It doesn't matter. They're not going to pull it off. Remember, half their sales are just chips they've given to people with pinky promises. Yep, fertilizer is rare and needs to be shipped. Diesel for tractors. Seems like something that should have been considered prior to bombing a giant oil producing region. Probably should have been considered before bombing the one giant oil producing region that has a literal fucking chokehold on 30% of the world's oil supply, 40% of the world's urea supply, and 20% of the world's anhydrous ammonia. It's fine. That's not a big deal. I mean, it's not like China's not sitting on just fucking unreal strategic oil reserves. Meanwhile, we're just running out. Yeah, it's not like we're exactly friendly with Canada right now either. Department of Crimes, yeah. Anyway, I think that's enough of a wrap up for today. I will catch you guys probably a little later in the day tomorrow. I'm gonna be busy in the morning, but I'll be on. I'll see you later. Peace.